Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, Eitel.
All right. Hey guys, it's Mark Eitel here, and you are listening to the Mr. Mortgage Show. And you are in the right place if you want to talk about the opportunities in the market. That's right. I said opportunities in the market because if you read the headlines, my God, you'd swear the real estate world has come to an end, right? Interest rates are up, the stock market's down, mortgage applications are at their lowest since the 90s. Nobody's selling, nobody can afford to buy. What's happening? The recession is coming. Is it here? Is it over? What is going on? Guys, we are still seeing people win in this market, but it's taking someone to think outside the box to figure it out. And I want to share some of the wins with you because, as I mentioned, it's all doom and gloom out there right now. And if you are waiting for the fearless leaders in Washington to save us, woo-hoo-hoo, it's going to be a long wait because that, my friends, is a circus. And all you have to do is flip on the news to agree with me. And I don't care, red pill, blue pill, or right down the middle. They're all an embarrassment at this point. It's ridiculous. But anyway, I'm going to stay in my lane, and we are going to talk about real estate and mortgages and where I am seeing people win. Hey, if you want to participate and get your questions or comments on the air, please call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. Jen, my producer, is womanning the hotline, and she will get your questions on the air. Hey, if you prefer to test out the brand new website, in the past you had to email us, but now if you go to MrMortgageRadio.com, that's MrMortgageRadio.com, right on the top, I almost said it. I almost said scroll to the bottom of it. Right on the top, there's a big yellowish orange bar. If you click that, you can type your question in and Jen will get it in real time. As soon as you hit submit, it'll pop up on her screen in a viewer. So we're super excited that that piece of technology is done. So go to MrMortgageRadio.com. Check out the new site, but use that, ask your question. I think it says get your questions on the air, but you can't miss it. It's a big orange or yellow button, depending on which eye you're looking out of. Anyway, let's dive in. What do I mean that there's opportunity in the market? Because yes, it is super, super expensive to buy a house right now from a monthly payment standpoint, from an interest rate standpoint compared to the recent norms, from a price standpoint compared to all-time historical prices. It's never cost this much. It's never cost this much to buy a home from a debt to income standpoint. It's really, really becoming a challenge. And we saw some data released this week suggesting that people are renewing leases at a rapid pace because of that. That was National Association of Realtors chief economist on CNBC was talking about that. And there are a lot of people finally coming around to the fact that we're in a higher interest rate environment for a while. And guys, if you've been listening to the show for any length of time, you know we've been preaching that. A lot of people thought I was a total donkey for saying rates could hit 8 before they hit 4. And God, we're flirting with 8. So I hate that came out to be true, but all the data suggested it. So my point is that this is where we are. The government's not going to save us, and these high interest rates aren't pushing pricing down. We're just not seeing it by and large because, as we talk about all the time, that's controlled by supply and demand, and who wants to sell a house in this environment? So replacing that lifestyle is much more expensive now. And because of that, we're just seeing a very, very little supply. But here's the opportunity, guys. You may have heard this term bounced around lately, but I think it's going to get a lot of steam. Multi-generational housing. And what do I mean by that? It's not as awkward as it sounds where, you've got adult parents and the grandparents and the kids all living in the same house. Although I grew up in a house like that. The home that I grew up in was built in the early 1900s, and it was built with a full mother-in-law suite on the back. A full kitchen, dining room, full bed and bath was attached to the back of the property. And my grandfather built an addition onto that, another 2 full bedrooms. So when we were children and my mom was bootstrapping it as a single mom, doing whatever she had to do to give us a great life, and my mom was a rock star, still is today. Thanks, Mom. We lived there. So we had grandkids, my mom and her parents all in the same home, the same building, if you will, but it was designed as such. We each had our own entrance. It didn't feel like we were living with our grandparents until we needed our grandparents. They were just right there. Well, guys, that's catching steam again. California has changed a bunch of their zoning regulations to accommodate these ADUs. You'll hear that term a lot, accessory dwelling unit. And it's essentially a tiny house on a city lot. You know, in the past, these lots were too small for a second structure, and they're making it achievable where you can now build a 400, 500, 600 foot structure on the property. And now you've got essentially a studio apartment or a 1-bedroom, 1-bath apartment on the property to try to ease this. Well, guys, imagine this for a minute. And this is a true story. Just talked to a woman this week, and they're doing this right now. Her father-in-law, her husband's dad, is at the point in life where he needs help, but he's not assisted living facility candidate yet. He still wants to have his freedom and his independence. He just needs somebody to look in on him. So they're buying a property together. So the husband and the wife and the father-in-law are pooling their resources and buying a property, meaning they're all going on the loan because dad has income. He's got a pension. He's got Social Security. They're all going on the loan together, and they found a property with a full built-out, beautiful basement apartment. And on the main level, it's a beautiful 2-bedroom, 2-bath house with a den. The adult children are going upstairs, and dad is going out in this walkout basement apartment. And guess what, guys? When dad dies, the kids are going to maintain ownership of the property because they're on the deed as joint tenants with right of survivorship. They're all on the loan together. So they're not going to have to settle dad's estate when it comes to the real estate. They already own the real estate. It's homesteaded as a primary residence. So there's tremendous benefit there. And we're seeing builders start to get on board with this and build homes with additional suites with a separate entrance, or as I mentioned, that ADU component where there's essentially a tiny home built on the property at the same time that they're building the home. So people are starting to come around to this idea where the multi-generational housing can accommodate some of the pressure that we're seeing in the market because, you know, many hands make light work. So if the parents and the adult children are on the loan together, paying for it together, it's easier to qualify. And guys, I'll throw this out there. You're in your 50s, your son is in his 30s, and your parents are in their 70s or 80s. Imagine buying a 3-unit property together. And everybody's got their own place and everybody qualifies together, and it's a primary residence because you can do that up to 4 units as a primary residence. So I think this whole multi-generational thing is going to get traction. And as I mentioned, it's not a new concept. I grew up in a house that was built from scratch in the early 1900s with that in mind. And I think we're going to see more and more of it. So I just think it's a sign of the times, and it's one place people are winning. There's other places that people are winning that we're going to share on this week's show. But you hear the music, you know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this very short break. We'll be back with more of the Mr. Mortgage Show. Raise your hand if you are freaked out by what's happening in the banking world. Well, no, put your hands back on the steering wheel. It's all starting to feel like a house of cards. And what about that $17 billion, yes, billion with a B, dollars worth of bondholder money that was lost in that Credit Suisse takeover? Right now, I'm hearing more and more people talk about a flight to safety, and they're looking at gold and silver and other precious metals, but also rental property. Yep, income-producing rental property is starting to become sexy again. Guys, we've got an amazing loan program called the Landlord Loan. It's an easy way to acquire rental property. If you've got good credit and the assets, we don't even look at your personal income. We look at the income produced by the property. Assuming that it supports the debt, boom, you're a landlord. Check us out at mrmortgageradio.com. That's mrmortgageradio.com. My name is Mark Eitel, NMLS 1929005, and my team and I are here and happy to help. Check us out at mrmortgageradio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Guys, if you have questions or comments, you can call or text 855-462-7292. That's 855-462-7292. That is the Anytime hotline. Jen is womaning the hotline, and she will get your questions on the air. Or head over to the new and improved mrmortgageradio.com. That's mrmortgageradio.com. You can't miss the big yellow button that says get your questions on the air. If you click that, you can type your question in right there, hit submit. It'll pop up in real time on Jen's screen, and she will read it on the air for you. Guys, we're excited to have that little piece of technology in place. So if you have any questions or comments, that's how you get them on the air. And you heard me in that opening segment talking about multi-generational housing, and I wanted to sing for you guys. We are family. No, not. How about it's a family affair? No, Jen is saying no. Guys, some of you know I play the drums in a 70s style rock band, and they don't let a microphone anywhere near me for that very reason. So anyway, guys, we're going to get to your questions here in a second, but I did promise you a couple more wins. Another place we're seeing people take advantage of all of the equity that they have, that they never dreamt they would have because of all of this rapid appreciation, is the reverse mortgage. And guys, if you know my story, you know how I got involved in reverse mortgages. They're a big part of our practice, and the reverse mortgage is close to my heart. That being said, people have all of this equity, and instead of waiting until they die and leaving it to their kids and grandkids and hoping that the kids and grandkids act responsibly, a lot of people are warming to the idea that a reverse mortgage, pulling some of that equity out of the property and gifting that to their grandchildren for a down payment, or paying for their grandchildren's college education, or helping their adult children with whatever, buying an investment property, paying off debt. My point is, a lot of people like the idea of controlling how that equity is used instead of just hoping for the best, because I talked to a couple the other day that aren't very confident in their adult children's ability to manage the wealth to a point that it's going to make it to the grandkids, and they don't want to trust the grandkids with lump sums either, or go through the headache of setting up a liquidation schedule. So they're just going to gift them the money for a home. So anyway, guys, I just wanted to throw that out there because it is so doom and gloom out there right now. But these housing values do equate to a tremendous opportunity in the form of equity if you need it or you've got a strategic plan for it. So I just wanted to throw that out there. But speaking of throwing it out there, let me throw it over to Jen, and let's get some questions on the air. Hey, Jen, go ahead and throw me a question.
Brianna sent this. You were talking about parents and adult children buying together. This might make sense for us. What happens when the parent dies? Will we have to refinance?
Hey, Brianna, that is a great question. And no, you won't. That's what I love about this idea. If you buy the property together, and I don't know the makeup of the family, but let's just say it's you and your husband and your mother, right? The three of you. You're buying the property together. You're all on the deed. Joint tenants with the right of survivorship is a pretty common vesting of the deed when you've got multiple borrowers, and it's all your primary. So you own a third of that property, right? Your husband, you, and your mom. Well, when mom passes, you now own half that property, and you don't have to refinance, and you don't have to transfer ownership and reset the value, and it's not part of the estate, if you will, because you already own that. She's a co-borrower. a co-owner. So no, you don't have to refinance. And that's one place people get super confused. So I'm glad you asked that question, because that's a benefit of this strategy. And I really, really believe, guys, moving forward, we're going to see more, and we're already seeing builders start to accommodate this. We're seeing that ADU component, as I mentioned, as legislation is allowing it on some of the smaller pieces of property, you're able to build that mother-in-law suite, but we're also seeing new construction with the full-blown second master, second kitchen, second entrance starting to become a thing. So I believe moving forward, it's kind of back to the future, right? Marty McFly and what was that? The DeLorean. As I mentioned, the house I grew up in was built in the early 1900s to accommodate multi-generational family living in a very comfortable way, meaning 2 kitchens, 2 entrances, essentially almost like a glorified duplex. So I don't know. I think it's going to become a thing. And to answer your question, no, you wouldn't have to refinance in that scenario. So brilliant question. I appreciate that one. If you need more information around that, please feel free to reach out or head over to Mr. Mortgage Radio, and you can shoot us an additional question there, and I'll do my best to get you the info. Hey, Jen, throw me another question.
Adam sent a text. We're looking at a townhouse that has a brand new roof, and the seller is expecting us to take over the assessment payments. This doesn't sound fair. Shouldn't they have to pay it off?
Hey, Adam, that's a great question, my man. I don't blame the sellers for asking you, but I agree with you. If I'm buying a house with a new roof and I'm paying for a house with a new roof, meaning that new roof is adding value to the house, you're already paying for it. Why would you then take over the assessment financing on it? So I am in your camp on this one. Let's play it out round number wise. Let's say the roof was $20,000 and you're buying the property for $300,000. Well, Mr. Seller, if you want me to take over the payments, then I'll give you $280 for it, because I'm paying for the roof twice if I'm not. If you discount the purchase price by the roof amount, that might be a strategy, or they might just be flexing to see if you'll bite and pay for the roof. But don't forget, almost everything in a real estate transaction is negotiable. So them asking certainly is not out of the realm of reality, and somebody might be willing to pay it, but you pushing back, I think you have every right to question that one. So great question. I appreciate that one. Hey guys, you hear the music? You know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this very short break. We'll be back with more of the Mr. Mortgage Show. Have you recently gotten a mortgage approval and now you're wondering, how do you know if it's a good deal? I mean, the wrong decision can cost tens of thousands of dollars in fees and interest rate. Is any of this negotiable? Is this a good rate? Guys, it's Mark Eitel, host of the Mr. Mortgage Show, and we are happy at no cost or obligation to you to take a look at that fee sheet for you. We'll go line by line through it, and one of 3 things will happen. 1, we may congratulate you on getting an awesome deal, and then you can exhale and move forward knowing you did great. Or 2, we may be able to point out some places in that fee sheet that you can go back and renegotiate a better deal with your current lender. Or 3, and guys, this one's my favorite, we may be able to offer you even a better deal, saving you in fees or interest rate or both. Guys, there's no obligation. Just go to MrMortgageRadio.com. That's MrMortgageRadio.com. Click on that fee sheet review icon and we'll do the rest. It's Mark Eitel, NMLS 1929005.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Hey, thanks for spending a bit of your day with us. We always enjoy our time together, and if you have questions or comments, call or text 855-462-7292. That's 855 462-7292. That is the Anytime Hotline. And Jen will get your questions on the air as she is womaning the hotline. She's also watching for questions submitted via the brand new MrMortgageRadio.com. That's MrMortgageRadio.com. You can't miss the big orange button that says get your questions on the air. You can submit right through there. Just hit the button. Type in your question, hit submit. It'll pop right up on the screen in front of us, and Jen will read it on the air. We're super excited to have that functionality now. It's streamlining things, I think. We'll test it here in a minute as soon as somebody hits it. But we're excited to have that. And check the site out. We've kind of cleaned it up, organized things. You'll find links to everything that we talk about on the show. On the bottom of the page is the Facebook link. We post all the articles and all the data that we use each week to that Facebook group. So you can find everything at MrMortgageRadio.com. But hey, that's enough about the website. Let me throw it over to Jen and get to some more questions. We've had some good ones so far. Let's keep them rolling. Go ahead, Jen.
Tanya used the website form for this one. What is the name of the wedding registry app for down payment gifts?
Hey, that's a great question, Tanya. And thanks for using the website link. Tested and it's working. All right. I'm going to post all of them to the Facebook group because there are a few. And if you're curious what we're talking about, I think it was week before last, we talked about wedding registry apps. So instead of asking for bread makers and extra china, who has a china cabinet anymore, right? We're in the tiny house van life generation. How about asking your wedding guests to gift a portion of your down payment? And that's what's cool about these apps, guys. In the past, collecting $50 from this person or $75 from that person and documenting it all with gift letters and the paperwork necessary, man, that wasn't happening. It was a nightmare. Well, these apps have certainly simplified things, and some are better than others, and we're going to rank them and post them, but they do the documentation for you. So your wedding how about this one, guys? How about do an intimate wedding, live stream it on Facebook, so your guests don't even have to travel. You don't have to go to all of the expense, or your dad doesn't have to go to all of the expense of a big extravagant wedding, and then encourage everybody in lieu of a traditional wedding registry. You set it up so that people can contribute to your down payment. What an amazing opportunity. Technology has certainly made that easier and obtainable. I love the idea of a live streamed wedding. You could even have somebody in the wedding party going up and down with the phone so everybody gets a chance. Like the greeting line, you could greet all of your guests via the live stream. Do FaceTime. There's got to be an app for all of that. Anyway, I'm getting sidetracked. If there's not an app for it, maybe we should invent one. Oh, who am I kidding? It took us a month to get the question button up on the website, but somebody out there can invent a live stream wedding app and then couple that with this gift of down payment strategy, and you might have something there. So check out the Facebook group. We'll post that when we get off the air, so it will be on there for everybody to see. But great question. Hey, Jen, toss me another one.
Shelley is asking, how does the equity line feature work with a reverse mortgage? We're a little nervous about the economy. It may be nice to have it if we need it.
Hey, that's a great question. The cool thing about the equity line component, if you will, it's an account that the funds are placed in that you have access to. So it's not truly like an equity line, but the cool thing is it earns interest. So that line is growing each month. So it's really a powerful tool. I talked to a gentleman. He paid all his closing costs up front and put everything available to him in that equity line component of the reverse mortgage. Well, if the interest rates are 8% and we see the headlines where rates are going, well, he's earning interest at that same rate. So if his interest rate is 8%, that equity line is growing at 8%. There's a lot more to reverse mortgages. People have this negative connotation that they're predatory and I'm going to lose my house, I'm going to owe more than it's worth. There are some very creative strategies around the reverse mortgage, and that equity line component of it is just one of them. So you can take all of the equity available to you in a lump sum. You can take it in monthly payments, or you can put it in this credit line feature, if you will, or a combination of the three. But the unused funds in that equity line earns interest. And a lot of people don't realize that. So great question. I would love to walk you through the reverse mortgage in detail if you'd wish. But that's a great question. I appreciate it. Check out MrMortgageRadio.com and click on that More About Reverse button if you want to start the conversation. Thanks again for that one. Hey, Jen, throw me another question.
Timothy sent this one. My mom recently deeded her house to me so we can avoid probate in the future. I'd like to pull some equity out for repairs. How long do I need to own the home before I can do this? I'm the only one on the deed.
Hey, Timothy, that's a great question, my man. Typically, it's 12 months. There are some loans that will allow 6-month title vesting. And then there's a whole component of time in the underwriting guidelines where you can use the appraised value versus the purchase price. But if she just quitclaim deeded the property to you for $100, you're certainly going to want to use the appraised value of the property. You might have to provide a letter of explanation just to kind of spell out why you transferred the property in to your name from mom's name. I get it that you were trying to make the transfer process clean when she passes, but you're going to be somewhere between 6 and 12 months with the majority of the loan programs that are available. So I hope that helps. You didn't mention how long it's been, so I don't know if you're over that 6-month hurdle or not. Hey guys, you hear the music? You know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this very short break. No more singing, but we will answer more of your questions. We'll be right back with more of the Mr. Mortgage Show.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Tired of realtor commissions gobbling up your hard-earned equity? Say hello to FSBOzilla, the commission killer. FSBOzilla is your free, no-obligation resource for selling your home by owner. Yes, you heard it right. Free. No gimmicks, no catches, just everything you need for a successful for-sale-by-owner process from start to finish. Check out FSBOzilla.com. You'll never have to show your home to a time waster, tire kicker, or unqualified buyer. And say goodbye to those pushy realtors trying to snatch your listing. No more untimely calls, no more uninvited strangers. Ever wonder who they're letting into your house? Grab your free copy of the book, FSBOzilla, the Commission Killer, today. Keep your equity where it belongs, in your pocket. Sell it yourself, save thousands. Visit FSBOzilla.com. FSBOzilla, the Commission Killer. That's FSBOzilla.com.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Guys, questions or comments, just call or text 855-462-7292. That's 855 462-7292. That is the Anytime Hotline. Or head over to mrmortgageradio.com. That's mrmortgageradio.com. There's a gigantic button right in the middle of the screen that says get your questions on the air. Jen will get your questions on the air. She's womanning the hotline. She's running the computers, running the board. She's keeping me in line. I don't know how she does it back there, but I know she's got some more questions ready. So, hey, Jen, throw me another question.
Hannah emailed this. Between inflation, home insurance, and now a new roof, we are in a real bind. We think a reverse mortgage can help, but our son is discouraging us. If we do this, can we prevent him from finding out?
Oh, wow. I hate this. And this happens from time to time. And I'm not saying anything disparaging about your son, but there seems to be two camps of adult children. One camp is just trying to preserve their inheritance at all costs. And the other camp will do anything that mom and dad needs them to do. And this one's tough for me because it's your equity. You've lived a life, made all the right decisions, paid your bills, built the equity, created a home. I'm sure you did the very best by your son. And if he's discouraging you because he's trying to preserve his inheritance, then that's just disappointing. But I don't want to get too philosophical. I've seen all sides of this argument. Then there are the kids that are helping their parents. They're giving them, $2,000, $5,000 a month. And instead of giving them the money each month, they would prefer the parents do a reverse mortgage and the parents have their own independence, and then it saves the kids having to contribute to. Anyway, I'm not going to get sidetracked. To answer your question, a mortgage is going to record in public records. So if your son wanted to research it, it's likely that he would be able to find it. I don't know a way that it can be confidential, but I might be wrong. You know what I will do? I'll ask a title attorney if there's a way that it can be recorded confidentially. I just don't know the answer to that. And I'll shoot you back an email answer. But you don't need to involve your children in the application process. That's completely up to you. But from the standpoint of the mortgage being recorded and the lien being recorded, if somebody searched public records, they would see whatever the mortgage company is with a new mortgage on there. And, it wouldn't take much for them to figure it out from there. So I don't know how you lock it up in confidentiality from your son, but you wouldn't need to involve him in the application process. But I hate that you're in this position. If you need some guidance or you have questions, I would love to jump on the phone with you. Part of the reverse mortgage package includes documentation that helps the children understand what their parents are doing and going through. And if he's just discouraging you because he has a misconception about it, that's a completely different circumstance. And maybe just including him in some of the research and the dialogue, he might, now that I say that out loud, he could be very well-intentioned and just afraid that you're being taken advantage of because he doesn't understand the program or he's heard something. If that's the case, then include him in the documentation, the disclosures, all of the booklets. There's one for the heirs and the children. I mean, I would welcome a conversation. But if it's an equity preservation thing, there's not a whole lot a third party can do to dispel that. But anyway, I hate that you're in that position. I love that you asked the question. And anybody out there who's struggling with this and you're just curious to get a bit more information, mrmortgageradio.com. There's a button that says more about reverse. There's a little video that explains some of the common misconceptions, and then you can request a booklet. But to answer your question, I don't know a way to keep it confidential. If he wanted to research the public records, he would likely see the recorded mortgage pop up. So again, hate that you're in the predicament, but thank you. Thank you for the question. Hey, Jen, can you throw me another question?
Diana sent us a question. Can we get a mortgage on a tiny house? We plan on owning the land, if that helps.
That's a great question. And I might have confused the language, right? Because I was referring to the mother-in-law suite as a tiny house. So there's a lot more I would need to know. There's not a traditional mortgage product available for a tiny house, right? Because they're typically on trailers, at least the ones that I'm familiar with, like that Tiny House TV show that's on the cable network on the weekend. I'm addicted to that show. But if there is financing available, it's going to be more like a recreational vehicle. And there may be some recreational vehicle financing available for, when I say that, I mean like a camper or an RV. If it's affixed to the land and it's deeded as real property, that could be something different. You're going to get into a situation there if it's conforming to other homes in the neighborhood, and if it has utilities, all of that comes into play in underwriting. But as a high-level answer, there's not a traditional mortgage product available for what most people class as a tiny home. But I would welcome a deeper conversation in case I'm misunderstanding your question. But I appreciate that one. Hey, Jen, let's keep them going. What do you got?
Victor sent us this. We had our house on the market, but now want to keep it as a rental. Can we use a landlord loan to pull some cash out? We've already moved into the new house.
Okay, this is interesting. So the short answer is yes. But here's the thing, and we've recently been involved in a transaction like this. The people relocated and they put their house on the market, and they got some offers on the house and they were considering selling the property. But then they consulted with their CPA, and the CPA did the math and determined what their capital gains were likely going to be on the sale of the property. They've got some other losses in the future that they're anticipating. So they decided to take their house off the market. Now, it was already listed, so there's public evidence, if you will. It was on Zillow and the MLS as a property for sale. They took it off the market and did the landlord loan to pull the cash out and refinance it. Now, they had also already moved into the new home, but we had to provide to the underwriter a letter of explanation, just spelling out what changed, because on the surface, it looks like you tried to sell the house, you couldn't sell the house, you're in a jam, you want to pull some cash out. Because banks are always underwriting to cover their butts. They're going into it with the worst in mind. So in this scenario, they put it on the market. They had an offer on the market. The CPA advised them of the capital gains. They chose to defer the capital gains. They have anticipated losses coming in the future. Basically, it'd be a better time for them to sell in the future. So they took it off the market. The underwriter was okay with that explanation, and the landlord loan afforded them the cash out. So a long answer. It's doable, but I just wanted to throw that other scenario out there because there might be some additional steps needed. So great question. I appreciate it. Hey, Jen, let's try to squeeze in one more.
Darcy sent this. Are there any no income verification loans for debt consolidation? Things were already tight, but I lost my job last week, and I'm really nervous.
Man, that is a tough situation. There is not a no income verification debt consolidation mortgage. Now, that being said, if you've got a ton of equity, there may be an opportunity for a private lender to come in with a short-term plan and get you some access to some capital, but it's not going to be favorable interest rate or terms compared to a conventional mortgage. But man, I hate that you're going through this. Call me off the air and let's see if we can't walk through this scenario and maybe I can help you figure something out. I'm really, really sorry to hear that you're going through this. But guys, if you feel that there is trouble on the horizon, don't wait until it's too late. You might find that you're boxed into a corner without many choices. So, and I know it's unlikely that you saw this coming, but I'm just using this as a moment to kind of reflect. And, getting money is easy when you don't need it. Sometimes when you need it, it's hard to get. So anyway, I hate that this is happening, but I look forward to talking off the air and maybe we can figure something out. Guys, you hear the music? You know what that means? We have wrapped up another week of the Mr. Mortgage Show. This one on a slightly somber note, and I hate that, but don't worry, we are going to dive into that one off the air, and maybe we can figure something out. Hey, guys, if you need us during the week, head over to the new and improved MrMortgageRadio.com. That's MrMortgageRadio.com. One more time for the kids in the back. MrMortgageRadio.com. Otherwise, tune in next week right here, same time, same station, and Jen and I will be back with more of the Mortgage Mayhem. Guys, have an amazing week. We'll see you next week. Be good.